shares of Roku tumbling after reporting its fourth quarter earnings. The streaming service beating the street's revenue expectations in the latest quarter, with active accounts surpassing 80 million. But Roku signaled near-term challenges ahead thanks to an uncertain macro backdrop and uneven recovery in the ad market. For a deeper dive into the company's latest results, we're joined by Shweta Khajuria, Evercore ISI Director of Internet Equity Research. And Shweta, thank you so much for joining us. You laid out some key questions for the call in your note. I'm curious, did the call change your thinking about this earnings print at all?
Well, first of all, thanks for having me. There were a few things that came out that got us incrementally negative on Roku. A few things. One is that the magnitude of the beat in the fourth quarter was not as robust as what they've done in the past. And two, the first quarter guidance implies growth rate that was less, somewhat slower or muted than we expected. And the management team called out muted demands in their M&E segment, which is media and entertainment segment of platform revenue, which is a high margin business, and as well as tougher comps in SVOD, or their subscription business, because price increases and ad-supported subscription tiers that were launched in 2023 got that revenue segment to be very robust or healthy throughout 2023, and so now they have tougher comps. So for a variety of reasons, the growth rate expected in 2024 is likely not going to be as high as investors were expecting. And then the second thing is on profitability, which is a key thing for this company. And they did a great job by cutting costs. They had several RIFs, or reduction in workforce, and that was in 2023. What management said during the call was 2024 remains a year where they will now think about top line growth, invest some of their profits and gains back into the product and feature upgrades. And so what the implication there is that perhaps the philosophy of their guidance has not changed, but the upside that we could have, investors could have perhaps seen in 2024 to profitability may now be a little bit more tempered. So for those reasons, I'm incrementally a little less bullish on it, or I guess incrementally bearish on Roku.
So Shweta, when you think about where some of these companies want to have ad spend, why would it be a Roku versus, say, one of these bigger ecosystems, your Apples, your Amazon? What sort of edge do you think Roku could have in this space?
Well, Roku has 80 million active accounts, and that is a very large audience. That is a majority of them are in the US, but they have a very good presence in North America and Mexico, as well as in Canada and some of the other countries as well. So having that audience, and some of it that is fully complementary to some of the other platforms, is a huge plus for advertisers. And the fact that they have first-party data of all logged-in users, they know who is watching what, and being able to deliver that return to advertisers on that audience is a key value proposition that Roku offers. The challenge or the question for Roku's differentiated moat and value proposition on a go-forward basis is that with more supply coming in, with Amazon Prime Video ads now coming in, and a lot more other streaming platforms also offering ad-supported tiers, is Roku monetizes the Roku channel the best? Is that app, or is that platform's value proposition diminishing because there is greater supply than there is demand, and there are only so many ad dollars to be circulated? So the draw that Roku has is clearly its audience. However, the question on a go-forward basis is the supply and demand dynamics, where Roku could potentially see some diminishing impact. What Roku is trying to say is that there is still a huge gap between viewership and ad dollar shift to CTV. 60% of viewers have already shifted to streaming, right, but only 30% of budgets have shifted. So as that gap closes, Roku clearly would be a secular beneficiary. The question that investors are asking is whether the secular tailwinds will be greater than the headwinds that it may face with the supply-demand dynamic shift.
Shweta, does it matter that Roku customers may not even know that we are Roku customers? We were talking about this in our morning meeting, and I don't know about you, Rochelle, but I have a Roku TV, but I don't think of myself as a Roku customer. Is that an issue for them?
Well, not really. The benefit of Roku is that those folks, and I'm not sure what you think about your Roku, but I have Roku on my TV as well, and I'm pretty satisfied with it in terms of the user experience. So the stickiness that they get from these 80 million users is that once you buy a TV and it has Roku, you don't change your TV for maybe 5 to 7 years. The age of dongles, making a dumb TV smarter, is kind of now has shifted towards just buying a smart TV. And so that's where they build a stickiness of the audience. But as a consumer, yes, we may not care if it's Roku or whether it is Google Chrome, et cetera. But they have the benefit is that Roku has penetrated about 30% plus of the operating system of all the TV. So there's a greater chance that the next TV any consumer buys comes with the Roku operating system. And that's their edge because of their leadership position of Roku being integrated in some of these OEMs or in these TVs, like TCL, for example.
Well, we continue to track all of that action. Appreciate you taking the time to break this down for us. Shweta Khajuria, Evercore ISI Director of Internet Equity Research. Thank you so much.
Thank you.